This is our Forex blog for November 14th, 2011. And like most days, we look to buy the strong currencies versus the weakest, and we look to sell the weakest versus the strong. You're always going to have higher odds and also the increased chances of making more pips when the real-time trend matches the daily, weekly, and monthly. So you can see here at 3 o'clock, the yen had incredible strength, more so than the dollar. And the daily trend is up, the weekly trend's up, the monthly trend's up. So this is a trend that is more likely to continue. And I think this is the number one reason that people that don't understand how to use our currency meter fail to comprehend. On days like this, when trends line up on all time frames, they tend to continue. And you can see for the most part, a lot of strength for an hour, very little weakness for 15 minutes, intense weakness for 10 minutes, a little bit of strength that builds up into a crescendo of intensity. Again, very little weakness. That trend came back for half an hour. Very little weakness for about a half an hour. Trends don't move one way forever. They go up, they pull back, they go up. They either go sideways or they pull back. They go up, they go sideways or pull back, and then they go up again until the trend moves statistically too far, and it tends to reverse. So, you can see today a perfect example of a trend that's up on all time frames. And for the most part, the euro is pretty much down on all time frames here, and the vast majority of all the momentum moves are to the downside. And that's why, at 6 o'clock right here, when this became really weak and the yen was strong all day, and obviously this was weak even from 2, the intensity on down moves is more than the counter trend moves. Now, earlier on, the daily and weekly trend were up here. It's kind of shifted down a little bit at 6. But you can see at 3, the weekly trend really isn't that much up. So from 3 on, especially since this is when the yen shifted up on all time frames, you want to sell the weak euro versus the strong yen. So let's look at the chart here. Here's 3 o'clock, and obviously this was a news event. It just gapped down. But the yen was strong the rest of the day. The euro was weak. And you're always better off looking at a range bar to find, these entries. Here's our lower containment bands. Usually price doesn't go and stay underneath the white band. This one came down to a red band, had a little bit of a pullback. Because of the extreme weakness, you might have wanted to short right here. And you can see it just kind of drifted down a little bit. You would have had maybe a 3 to 5 pip win, break even, or no more than a 5 or 6 pip loss. And then it pulled back up again, hit the 50-day moving average resistance area. You can see the counter trend move had less intensity than the down move. Good place to go short, somewhere around 50 when it starts breaking down, and the trailing stop got you out here at 20. So you made 30 pips. And it became really choppy the rest of the day. But, typically you want to wait for a 15 to 25 pip pullback before you sell. But we'll look at some other examples here. Here at 3, the pound became really weak on the daily and the weekly. Because the pound was so strong previously, the monthly trend's still up. You want to look for incredible weakness, and I prefer at least an hour of strength or weakness like this, followed by a pullback with very little intensity. Again, it came in here around 5:35, very likely to continue that intensity. And so, you might have traded that against the strong yen around coming up to 5:30. Pound yen, you're looking to sell. Let me zoom in on this by hitting the plus button. Again, this has a nice pullback right here. You go short, and it's not the biggest win in the world. You might have been short somewhere around 78 as it went sideways right here and came down. And then it kind of went sideways right here. So it also hit our Fibonacci profit target level. I spend about 30 to 45 minutes every night drawing the Fibonacci retracement levels and Fibonacci profit target levels on both, the last week or two and also the last few months. So there's multiple different fib areas that show up. The dark gray ones are Fibonacci profit target levels, and they're oftentimes areas where the market's going to have major support, and that's what happened today. If you look at some of our other currencies, we might see some other areas. Here's these fib areas acting as major resistance. Until it breaks above there, it's not likely to go up. This acted as major support. Once it broke it, all the stops got hit, and it caused it to go down lower. The euro yen didn't get hit. The pound yen didn't get hit. You can see the euro dollar was right underneath a major Fibonacci area and couldn't get above it. This is a pretty big sign that when major areas of buying or selling don't get penetrated, the trend's very likely to go the other way. And our containment bands are made up of two different things. One is the hourly moving average, which shows up in the middle. And this works on all of our time frame charts. This is a 5-minute chart here. It also shows up on tick charts, range bar charts, and so forth. And allows you to see a longer time frame trend. It's a major support area and resistance. When the market's above it, tends to go up. When it hits it, it's likely to find support and go up. If it can't go up and break the previous high, guess what? It's very likely to trend the other way. And so when this broke down underneath hourly right here, it's a pretty high probability, low risk trade right around 37.50, and you can see that the euro dollar trended down all day. It's pretty easy to trade with our FX Trend Pro, which compares the euro and the dollar to every other currency with 5 different factors. 3 of them measure the direction they're all moving, and 2 of them measure the intensity of the direction. So anytime you see a plus 80 or a minus 80 reading, the red is minus, the plus is green. Those are trends that are likely to continue. Anytime you see a huge move with a lot of intensity, and then the counter trend move has 1/2 or 1/3 or 1/4 the momentum that the previous move does, guess what? It's very likely to continue in that direction, as this does here. As you can see all day long, the weakness, the peak weakness momentum is much higher, in some cases 4 times higher, visually, not the absolute value of it, but just visually it's 4 times higher. Those are trends that are likely to continue. And you want to trade with those trends until it gets underneath the white 2.0 band. Typically, they're buying, or the selling in this case dries up and you get a little bit of a pullback. You sell again. You realize you're not going to make a 100-pip move here, but you might have shorted at 62. It comes down. You get a counter trend signal right here. You're out here with the 20 pips. Keep in mind that 10 pips a day net, if you made 10 pips every day using small 2% risk per trade, you double your account every 2 months. So, a 20 pip here, 30 pip there, that's, a 20 pipper and a 30 pipper is an entire week's worth of minimum profits, which would double your account every 2 months. So new traders always are talking about getting 50 and 100 and 200 and 300 pip moves. And, it just kind of shows your ignorance. You need to focus on consistent small wins per day, and your account will do very well. You can't afford to take 50 pip losses if you're only making 10 or 15 pips a day. Obviously, small losses, big wins. But consistently getting small wins every day can do very, big things to your account over a small amount of time.